Good afternoon, everybody. Andy here from the Indicator Store. Excited to be presenting this Saturday morning or afternoon. It's been a while since I've done a Saturday webinar, and thanks for giving up your time to be here. Definitely today, I'm super confident I'm going to provide something that offers you some real value, and I think you'll find pretty interesting. So without any further ado, let's get to it. As always, make sure that you're fully aware of all the risk and the disclaimers that go along with being a trader and a short-term day trader. So here's what we're going to do today. We're going to talk about what exactly is cross-market multi-time frame automation. We're going to talk about how we put cross-market multi-time frame automation into practice. So what is it and how do we use it? What does it do for us? We're going to talk briefly about the problem of edge erosion, and we're going to talk about the solution to edge erosion. I'm not going to spend a ton of time on that, and I would encourage the time we do spend, I think will, for those of you that maybe are first timers here and haven't watched any of my other presentations on edge erosion, if your interest is piqued and you realize, you know what, that is a big important issue, because I believe it is. I believe it's the #1 success killer of short-term traders, edge erosion. So we'll only talk about it for maybe 10 minutes, but there's a webinar that we did on June 14th that you can find on YouTube, or just email me and we can send you a copy of it, where I spend 30 or 40 minutes really getting into more detail than we're going to today on that subject. And I would encourage you definitely to check it out, because once again, I do believe that it is one of the main reasons so many traders work so hard to succeed but don't actually make it. We're going to talk about a portfolio of automated trading systems and how it's a great way to actually combat edge erosion. And then of course we're going to go to the charts. I have 3 systems that were created by Markers Plus and would be a great example of a start to an automated trading portfolio that I want to share with you guys today, that I think you'll find pretty cool. So what is cross-market multi-time frame automation? Cross-market stands for trading different markets, not only focusing on just one. All markets don't trade in unison. So by having different markets represented in your portfolio of automated systems, you're adding significant and very important diversification. Just as an example, the NASDAQ is heavily, and the YM, the mini Dow, is weighted differently. So there could be a day where the NASDAQ may go up and the Dow may be mostly flat or even go down. Those things do happen. Now they often trade in tandem sometimes also, but diversification is definitely an advantage. And throwing in a commodity like crude oil or gold or other things can definitely be a good idea too, because those often trade, quite a bit different than the stock index futures. Multi-time frame stands for having trading systems in your automated portfolio that fit 3 categories: a long-term focus system, a medium-term focus system, and a short-term focus system. And we're going to break that down in more detail. So how do we put cross-market multi-time frame automation into practice? Well, what we do is we build a portfolio of systems that contains a long-term focus, like we just mentioned, a medium-term focus trading systems, and a short-term focus trading system. Here's the characteristics for each of these segments. Okay, for the long-term systems in your automated portfolio are usually going to be fully automated. So these systems are going to generally run themselves. Now, it's really important to hear and to know that Pablo and I are strong believers that you never just turn the machine loose and trust it entirely. It's smart, in our opinion, to, even if you have a fully automated system, you always want to keep your eyeball on it to the best of your ability. Now, it's okay to walk away here and there. It's okay to even, you decide. You have to decide what is okay. But for me, when I'm running a fully automated system, I'll definitely leave the room, and occasionally I'll even leave it alone for an hour or two here and there. But I would never leave even a long-term system alone without checking on it like for a week. That wouldn't be a good idea, in my opinion. So even fully automation, we still want to keep tabs on. Generally, larger stops and profit targets are used, often in the hundreds of ticks. So for a longer-term focused system, you can have profit targets and stops that are 100 ticks or significantly more, depending on the design of the system. Long-term generally focuses on an average of 0 to 3 new trades each week. So many times trades are held for days or even weeks in this type of a system. Okay? Now with a medium-term focused trading system, the characteristics are a little different. Oftentimes, medium-term systems are also fully automated, but they can definitely be semi-automated also. And maybe sometimes you might have one medium system that's fully automated and another one that you run in semi-auto mode. And if you're not sure what semi means, I'll fill you in on that in a second. The average stop size for targets generally ranges somewhere between 12 and 40 ticks. For a medium-term focused system, profit targets can be larger than that in some cases. In a medium system generally averages between 1 and 5 trades a day, but on those really special days, where the market's going pretty crazy and has significant range, you can get to where there's as many as 10 or 15 trades a day, even in a medium system. Now, a short-term focused trading system generally is semi-automated. There are some cases where people will fully automate a short-term system, but I don't advise it. And the main reason is the market is always changing and changing so much that fully automated short-term systems never maintain their integrity for very long. Now, if you want to run it in full auto mode and have to continually be tweaking it, that's one way to go. I prefer to trade my short-term systems in semi-auto mode. Average stops tend to be stops and targets somewhere between 6 and 20 ticks, and profit targets can be larger, again, if one is really trying to push that reward to risk ratio to the positive side, which is always a good idea. Generally, there's an average of 5 to 15 trades in a short-term focused day trading system. But on those really special active days, there can be as many as 25 to 40 or more on those exceptional days. So this is what the makeup of a portfolio would look like. Having at least one of each of these systems would be a very well-rounded portfolio. And somewhere between 3 to 5 total systems makes up a healthy portfolio. One of each, and then adding one more of, or two more, to get to 5 of any one of the varieties, depending on where your personal focus most lies. So I just want to briefly mention about a new service that's going to come soon. And the new service came about pretty much solely because of Indicator of the Month Club subscribers. Basically, enough of them were asking for more time. They wanted more face time. So currently we have our Indicator of the Month Club that's going really, really well. And we get tons of positive feedback from club members. In that club, you get one new indicator each month. You get a weekly training session. And Pablo and I continually update the indicators to make sure they're functioning at optimum levels for current market conditions, and those updates come out as needed as the market changes. And that's really, it's going great. But the issue is people want more face time. So Pablo and I put our heads together and we've come up with what we think is a good solution in this new service. We have not rolled it out yet. That'll happen probably in the next week or two. And basically what it's going to look like is we're going to get together daily. So we'll get together up to 60 to 90 minutes. You know, every day might be a little bit different depending on how many questions there are and how things are going. Probably we'll be meeting in the evenings, early evenings. And what we're going to do is we're going to recap each current day's price action. We're going to have a model trading portfolio for the new service. And every day we'll check to see how the systems within that model portfolio did during that trading day. So that's going to be super fun. And we're going to create support and resistance zones using my methodology for 3 markets. We'll do that together. So subscribers to this service will learn how I do that. And then, of course, they'll have the zones available to use in the next day's trading. And then I will also support you, those that are interested in building their own automated trading portfolio with Markers Plus. So this service is available to anybody and everybody. Indicator of the Month Club subscribers will get a nice healthy discount if they wanted to join this other service also. So don't be intimidated by that. So let's talk about edge erosion. We'll do this probably in about 10 minutes. Don't think it'll take much more than that. And then we'll get to the charts and have some fun. So why is it, guys? Focus in with me for 10 minutes, okay? This is really near and dear to my heart. I know that systems, especially automated systems, are super excited, and it's what people tend to come out to see and what they want to see and what they're interested in. But quite honestly, it's this right here. It's edge erosion is, in my opinion, one of the main reasons that there's so many traders out there that have been at this. They've bought so many different systems. They've bought so much different education out there. You know, you've been at this for a year, 2 years, 3 years, 5 years, 10 years, and you're still not as successful as you want to be. I encourage you to really understand what I'm sharing right here and then ask yourself, is that me? Is edge erosion really the reason that I'm not succeeding? Because there are solutions. You can kick edge erosion's butt if you follow some basic principles I'm going to share with you here in the next 10 minutes, okay? You know, I believe it is the primary reason, the #1 success killer for short-term active day traders. Every trader, to be successful, they have to have an edge. And most traders end up having small, technically controllable things that don't go their way over and over and over throughout a trading day. And little by little, their edge gets eroded away. And, you know, I think if you think about it, you can probably relate. Let me just mention 2 or 3 things that I suspect will sound familiar. Have you ever been, you know, you're sitting at your trading computer, focused as anything, you know, you don't want to miss any trades. You got your trading plan, you got your rules, and you're ready to go. You're sitting there, and it's been a little bit of a slow morning, you know, and you really got to go to the bathroom, dang it. So you get up, you go, and of course, while you're gone going to the bathroom for all of, 90 seconds, you're gone for almost no time at all, a winning trade occurs. So you missed a winning trade that should have been executed. It would have been a win. That's edge erosion. If you don't execute every single winning trade that occurs that fits your plan, that's significantly minimizing your overall profitability, and that's an example of edge erosion. So now you sit back down, you've gone to the bathroom, you feel great, but it's very hard not to feel as though, dang it, get a little irritated that you missed a trade. You've been sitting here for 90 minutes and nothing's happened, and the trade comes when you're in the bathroom for a minute or two. I'm sure it's happened to all of us. So now you're a little bit more on edge. You're super focused. You're ready. And you know what? You're ready to go. You see a trade coming up. Bam, you click your mouse. You're in that trade. And then you realize, oh, crap, I jumped the gun. There was one rule that I anticipated. It didn't actually happen. I anticipated it. I jumped the gun. Before you can self-correct and get out, losing trade. Another example of edge erosion. Guess what? The computer wouldn't have made that mistake. So if you were automated and all you did was turn your system on because conditions were optimal, the computer wouldn't have made that mistake. But we make that mistake all the time, that type of thing. So now you've missed a winning trade, you've taken a losing trade, and now, some people actually go on tilt and go crazy and don't even follow their trading plan, and that's obviously a really bad thing. But those are just two examples of, I'm sure we could all come up with, 15 or 20 different examples of those types of stories, little things that nip away at the edge. And you'd be surprised if you really ran the math on that stuff. It's absolutely the difference. Guys, success and failure when you're taking 10 to 20 trades a day, the difference between success and making really solid quality money and failure can be a very thin line. And that's why this issue is such a big deal. Edge erosion matters, and it takes winning profitable traders and turns them into break-even traders or losing traders. Okay, here's 3 ways that you can combat edge erosion, and I go into much more detail than we're going to today on these 3 topics in the June 14th webinar. If you would like to view that, let me know and we'll get you a copy. But automation is an absolute must, in my opinion, and I'm a convert. I did not used to believe this was true. About 9 months ago, I saw the succeed at this, not succeed. Really smart, bright people that have been successful in everything else in their lives. Why are such a high percentage of them not able to make this work? And as I really researched and thought about this, the edge erosion is what I came up with. And one of the main ways to combat edge erosion is automation. We need to let the robot do what the robot is good at. The robot knows exactly what it's supposed to do. It never makes a mistake. When it's turned on, it will do exactly what it's supposed to do. And in my opinion, as a short-term day trader, if you are not automated yet, you need to strongly consider it. Markers Plus makes it so easy to get there. And once you go that direction, you will not be able to believe how great it is, and you'll be like, why didn't I do that years ago? So very, very, very important. Number 2, you want to increase your reward to risk ratio. I'm a strong believer that, and again, this is a change for me. I used to be a super scalper, take all kinds of lots and lots and lots of trades a day, and I was fine with a 1-to-1 reward to risk ratio. I have shifted that mindset to decrease or to combat edge erosion. We need to have a larger reward to risk ratio. 1.5 to 1 is okay. 2 to 1 is better. 3 to 1 is incredible. So, basically for every time you win, you want to be winning more than you lose, because you know what? We're not going to completely eliminate edge erosion. We're going to minimize it significantly, but that increased reward to risk goes a long way to giving us that cushion we need. Number 3, okay, and this is probably the biggest place where the June 14th webinar will give you more helpful information. You want to always make the math working for you. Risk to reward is one place that the math works for us, but I broke it out into its own thing because it's so important. There's 3 or 4 other ways that you can make sure that the math is on your side to combat edge erosion. And you need to do all of them. You can't leave any stone unturned. You got to make sure you're putting yourself in every moment in the best position to succeed. So if you want more details on what those 3 to 4 different things are, definitely check out the June 14th webinar. Special offer for those of you that are not already indicator store owners. Yeah, that's the right term, I guess. We've put together a package of our most popular group of products, basically. And it includes Markers Plus. And what Markers Plus does is it gives you everything you need to turn your ideas that you've thought about, that you've worked over on your charts, and you're like, man, I really think this has an edge. Now you could actually turn that into a trading system all on your own without having to pay a programmer. Pretty awesome. And it gives you everything you need to build a cross-market multi-time frame portfolio of automated trading systems like we've been talking about today. It also includes 5 of the indicator store's top-selling indicators. So most used top-selling indicators are part of this package, and they're definitely the most used in the club. And every indicator that I'm going to show you in the 3 systems we're about to look at are included. All the indicators I use to create the systems that I'm going to show you today are part of that package. And you can see here we're offering really, really healthy 35% discount. So shoot me an email if you'd like a link to that special offer, or obviously if you have any questions at all. Here's all our contact info. I'll hang out on that page for a second. Also, if you're interested or have any questions about the new service there, where we're going to spend time together every day and we're going to build a portfolio, we're going to have the thing I'm most excited about that service, 2 things: the support and resistance aspect of it, I think traders will find really valuable, but also the fact that we're going to have and track the group will track a portfolio. We'll have an example portfolio of systems that we'll track and take care of, and hopefully that will really help traders that want to build their own to really have a leg up to do that. So if that's intriguing to you at all, and or you just have questions or want more info, email me at andy@indicatorstore.com about that. And risk disclosure for you, man, we made good time. I'm so proud of myself. Generally, I drag that stuff out a little bit longer, and you guys are all chomping at the bit wanting to get to the systems. So we did it. Let's do this. So I'm going to start with the highest time frame system, if that's okay to you guys. And what we're looking at here, let me just give you a little bit of feedback, okay? This is the primary tool used to build this system is a super trend indicator derivative, and it is included in that package of 5 indicators that's part of the special. So we're looking at a much higher time frame situation, okay, the long-term trading system. You're looking at a month, a little over a month's worth of data on the chart. Each one of these bars that's condensed is 75 ticks, so this is a 300 or 400 tick run or something, so this is swing trading, is basically what we're looking at here. Now, what I have that I'm showing you guys here is a system that is kind of the highest level that I would personally be interested in going. There's a lot of different ways to use these tools and other tools to configure systems that fit the long-term perspective that are not quite this high level, if you will. And what I mean by that is this system, while you can see at the beginning of the year, it was awesome. So in January into the beginning of February, it had 2 ginormous wins, which is a great way to start the year. But the reason the way the system is configured was able to do that is because it's willing to sustain a pretty significant size loss. So this system, as it's designed, will sustain losses of up to around 400 ticks. So for some of you, that might not be palatable, that you might not be willing to stomach a 400 tick loss. And by the way, we are looking at the YM, the mini Dow in this case. So I chose to highlight this system because it's nice and clean. It's very high level. There's not a lot of, we can get more sophisticated by a long shot than this. This is very basic. And I want you to see the power of swing trading, a long-term scenario, system, and what it could do if you added it to your portfolio. Many of you here are day traders only, and you take lots of trades a day and that's it. Well, I want to open your mind to the possibility of this portfolio concept that may have a system, something like this in there. But again, this system can be configured in different ways to have a stop as small as 100 ticks, for example, so that the biggest loss you would ever sustain would be 100 or 150 ticks. You could absolutely configure a very quality long-term trading system using these similar tools that would trade in that way. It would take more trades, but this is the cleanest version of it, if you will. So let's just kind of go through it, okay? As I scan through, you can see the year started with just 2 amazing trades. Oh, one other thing to mention, though, is this system leaves a ton on the table. So this system left 500 or 600 ticks on the table from its high, and it does that on every trade just about. So this isn't even the most profitable way to configure what we're doing either. One can get a little bit more sophisticated and harness more of the profitability than this system does. But I think you'll see by the end, this system, fully automated, was able to pull out some pretty significant profits. Also, by the way, I'm rounding. So all of these numbers are right within 25 ticks or so, 25 points, okay? Just kind of rounded to the nearest 25 ticks, or points, excuse me. Ticks, points is the same thing in this case. So as we move forward here, another really big win. So this year started off, really nice, 1,300, 1,200, and then a couple of more, ginormous wins. And then we get our first, whapper of a loss, man. So that's just where some traders just would never want to have to sustain, a 325 point loss. So you would choose to design the system a little bit differently so that, that type of a loss would not occur. And that's doable. One other thing, though, that I'll mention is, this is an example of just trading one contract. One thing that would level off the results here is if you were to trade 2 contracts and take one contract off at somewhere between 250 and 350 points. So the system used the trailing stop method for the main contract, right? But if you put a solid profit target in of 250 to 350, somewhere in there, lots of these losing trades would be winning net trades. Like this trade here got almost 400 ticks into the profit and still ended up being a loss. So if you chose to trade 2 contracts and take one off at 300, that minus 25 would be actually plus, would be plus 275, and this plus 225 would add another 300 points to it. All of these wins would add an extra 300. and some of the losses would be really mitigated. There's only a handful. Let's find out how many there are. There's only a handful of losing trades that would have just been doubled up. So like this one didn't get into the profit much at all. It just spun away. So adding another contract would have just made that, quite a bit worse. But in most cases, a lot of the losses would be made significantly less by the adopting of a second contract. Like this one here, that would have turned that loss into a win. So I haven't gotten any questions, so this is probably intuitive, but you see the arrows here. This is where the trades would be initiated. Trades initiated here, and when the market comes back to this line here, that's where the trade gets executed, or exited, excuse me. So the excuse me, the trade is initiated at the arrow and then exited when it comes back up to the line, in the general area of the line. So this trade, if you had that second contract here might not have gotten there. So that one might have been made worse. Would have been made way better. Would have been made way better. Here's another one that would have just been a, bad one because it just didn't get up into the profit at all, really. Gorgeous win. So now we're into March, okay? And this is the type of system, guys, that can be traded in full automation mode. Now, for those of you that are total day traders and you really haven't ever given much thought to or considered swing trading, one of the issues with swing trading is if you are fully, truly holding overnight, the overnight margin is significantly higher, so you have to have more capital in your account. One way around that, there are ways around that, that basically you have to exit at before 4:15, exit your position, but then you can kind of jump right back in when the market opens up again. It's a little different for each market, but it's somewhere between 45 minutes and an hour and a half, I think, in most cases. The markets open back up and you can put your position back on again. And doing it that way, you can still use the day trading margin. So it takes a little bit more effort. Generally speaking, massive moves don't usually happen in that time frame. If some major global issue occurred, it technically could, but generally it doesn't. So yeah. So Suresh, that's a great comment. Commented on possibly entering on pullbacks to limit the size of your risk, and the super trend system has a functionality already built in to do just that. So that absolutely is an option. So for example, if you're entering on this pullback near the end of the pullback here, you could turn your potentially 400 tick risk and make it even just 150 or something like that. So that is exactly correct, Jonathan. That is exactly what this is. Do you already own it, Jonathan? Okay, as we continue on. So here we get into the most rocky part of the 6.5 month period. Okay, so you'll notice, let's see, we come off of a nice solid win here, but then from late March to early April, it got a little bit choppy and we dropped a handful of points. So this is our biggest drawdown, if you will. But it's not too bad when you consider, the size of some of our wins. But the drawdown here looks like 450 back to 350, 5, 6, 7. So we're looking at a drawdown of like 900 points, so that's a pretty healthy drawdown. And that's the only point over the 6.5 months that type of drawdown occurred. with this system configured in this fashion. Yeah, absolutely, Jonathan. I hear you. I would definitely definitely say that's a good idea. So we continue on here. You know, just solid good wins, a lot of solid good wins. You know, this loss could have been turned into a win with that strategy that I mentioned. You could have added 300 points to this smaller win. And then the beginning of May, we get our giddy up on and get a nice big win again. And this would have been a 300 tick win if you were trading that 2 contract concept, but you can see it got in and got out at basically the same point. Another pretty big win here. And then here we are. We're in the midst of a really nice run up. Okay, so we'll see where that ends up. So let me know if you have any questions about that in particular. So that's to the example of our long-term a system configured something like this would be an example. So what this has produced, guys, in as shown here in what 6.5 months or so is 7,000, approximately 7,000 points. So if you added up all these numbers as we were going along, you would have come up with about 7,000 points at $5 a YM tick. That's one contract. That's one contract. Not too bad to pull that out of the markets. Yeah, so I configured this maybe a month ago. So this, let me be clear, this was not traded live that whole time. But what you see is exactly what the robot would do. And the cool thing about longer term swing trading type stuff, the market does what it does, guys. And, you know, you've heard me talk quite a bit about how the market's always changing. Well, when you're looking at the market from this perspective, there's not a lot of change that happens. The change happens in the really finite minutia of day trading. But from a higher level perspective, this kind of stuff, it just is what it is, you know? And some years you get more of, you know, some years you get more of, let me go back to the beginning, of this type of stuff, these ginormous wins. Some years it's, you know, middle of the road, and some years are a little rougher when this kind of thing happens a little bit more frequently, you know. But for the most part, it does what it does. It doesn't change all that much. And that's what's kind of beautiful about, you could expect to have if you were running this system, you could have expected these types of results for real. Do you understand what I'm saying there? Now, we'll see what happens moving forward. And those of you that are not part of the indicator store, you can email me at any time and ask me how any of these systems have done or are doing if you would like an update, and I'd be happy to share with you. I don't anticipate changing this one at all, really. The other ones may be adjusted based on market conditions a little bit. The medium term one won't be adjusted much, but maybe a little. And so, you know, if I adjusted things at all, I would let you know that it's not exactly the same as it was as shown in the webinar, that it had been adjusted or whatever a little bit. But I don't expect, we can leave this version alone. And this version, like I said, there are lots of other versions that can be created that have different goals and objectives, like keeping the max loss lower and that kind of stuff. But I expect this version to consolidations. If anything, we're going to get, you know, a bear market maybe on the horizon, and bear markets are great, you know, for us traders. For us traders, bear markets are great. Guys, I just got a little internet hiccup. I want to pause and make sure that you guys can hear me still and can still see my chart. I got an announcement that said I had a little bit of an internet problem. So give me a sound check. Let me know that we're okay. Okay, so it looks like maybe there was. How 5 seconds, somebody told me. Okay, so that's not too bad. Okay, if it was longer than that, I would have recapped, but I don't think we missed too much. Yes, the webinar is being recorded and it will be sent out. Okay, so here comes the multi-time frame. You ready? So that's the long-term solution, or a long-term solution, Fernando. And here comes the medium term, which is getting us into multi-time frame. Okay, so what we're looking at here is, again, a YM example of the YM chart. This is a system that I created about a month ago. I trade this fully automated. So not all medium-term systems will be fully automated necessarily. Sometimes they'll be semi-automated. But this system I've traded for the last 2 weeks fully automated, and it's done really good. And I anticipate it's done very well the past 6 months. You know, I've back tested, ran it in market replay and everything like that throughout the last 6 months, and it seems to be holding up really, really well. So I'm confident that it'll continue. The cool thing about this system that you'll soon see is that it doesn't take trades when it's tight markets, when the markets aren't going anywhere. Like, it only had one trade, I think, on Wednesday and no trades on Thursday this week because the markets really tightened up and they didn't give us much movement. Okay, so let me explain. You see all these signals, okay? This system, by the way, indicator of the month club subscribers, I taught every detail of this system in the training yesterday. So if you were not there, the recording for that will be coming out to you guys shortly. So exactly how to create and build this system was provided to the indicator of the month club subscribers. That's not going to be happening today. But those of you that are club members get all the, you could create this for yourself if you wanted to, and watch it as a possible medium-term solution if you wanted to build a portfolio. Okay, so what it is, however, is a combination of two moving average crossovers combined. One of the moving average crossovers is designed to spit out the signals, and you can see there's tons of signals, right? We're only taking the fully automated brains of the system is only executing less than 10% of these signals, probably less than 5% of these signals. So there's design logic that's created using Markers Plus, nothing overly sophisticated. There's not like layer upon layer upon layer, none of that. But it is a fully automated operation. So the first crossover gives us all these signals, and then the second crossover is used to identify which signals I actually want to execute. Okay? And here's what we're looking at. You see down here in this histogram, the filter is set up that we are only willing to take a trade when the histogram is above a certain threshold. And when it's above that threshold, it turns green. Okay, so when it's above a certain threshold, this horizontal line right here represents where the histogram has to be above to execute a trade. If the histogram is below that line, a trade will not be initiated. So We could have got a trade, could have got a trade, could have got a trade, but then you see it drops below that line, so there was no trade here. Notice that little dot. That is a secondary semi-automated potential trade that I've been tracking now for about 10 days that I'll also tell you briefly about, but it's looking really good, but it's quite new. So again, we could take a trade, but by the time this signal fires, it's back below. And this is such a beautiful thing. I had an individual, John, I think maybe you're out there. John is somebody that I've known for a really long time, and he is a consistently profitable trader. My hat's off to you, John. There's not enough of you guys out there. So one of the things he had been talking to me about more recently is with a moving average cross system, one of the biggest weaknesses is the chop. How do you weed out the chop? Well, here is a system, a fully automated moving average cross system that weeds out the chop, John, okay? Basically, it just doesn't execute trades when there's chop. It just doesn't do it, okay? It stays out. So yesterday on Friday, there was only one trade right at the end of the day, and it was a nice win. I only count a trade as a win if it gets at least 30 ticks of profit, okay? And again, it can be, when I taught it to the Indicator of the Month Club, I provided a range of settings. I told you exactly what my settings are for this chart, but then there's a range of settings. You don't have to create it exactly like this for it to work. There's a range of settings that you can, find value in. And if you use a little bit bigger stop, you stay in trades like this for a win. If you use a smaller stop, you can still trade this profitably, but this one wouldn't have been profitable. You might have gotten stopped out on this pullback, but then the system would have gotten you back in again, and you would have gotten the win. So, if you use a little bit bigger stop, you have a bit fewer trades, and but then when you lose a little bit bigger. If you use smaller stops, you have tend to have a few more trades. And but if it basically, what can you stomach? So it can be configured in multiple ways, which is really cool. Let's see here. A question came in. But doesn't optimization tend to converge an ideal setting? So here's the problem, Jonathan. The question is about optimization. Don't you want to optimize and find the exact best setting? In general, that's more true and okay, if you will. That's what I'm coming with for longer term systems. So like the swing trading stuff, sure, go ahead and optimize the heck out of it because the longer term can handle that better. It doesn't affect things as much. The lower down you go, the more optimizing is not the right option. You want to leave your system robust because if you tweak it too much, you will find that it'll work great for a day or two or a week, but then it won't work. And rather than having to reinvent the wheel constantly, if you find something robust that works, you might want to adjust it a little here and there, but it'll work more consistently. So yeah, I definitely don't personally over-optimize. And I'm sure there are settings that would be a little bit better for this week, for example, but I don't do that. I don't play that game. This system, the way it's designed right now, has worked really well for 6 months. Not with a lot of tweaking, not fitting it for this type of price action or that type of price action. It's worked solidly through all of that. And that's a cool thing that it's that robust. Okay, so let's pull back. Does everyone get it that, yeah, there's all these systems on the board, but the only ones being executed are the only one the auto system executes is the ones that I've circled, and we can go to the chart to make sure I'm telling you the truth. But so remember, the logic is that when the histogram is below that line, that horizontal cyan line, if a red arrow comes up, it's going to take the trade. So that happened here. It took the trade. Nice win. Now it pulled back and the histogram's no longer below the line, so it didn't take the trade. We came back down, the histogram is below the line, a trade happened, it took the trade, and that one was a loser. Okay? So look at, I just love the fact that it weeds all these trades out, you know? It's so great. Awesome run. So all this price action, this was these two trades were on Wednesday. There were no trades on Thursday, and then that one trade on Friday. So we've had a much more condensed market that hasn't been moving a lot, and that's why the system's not trading. Tuesday, the 9th, look at that huge run. At each one of these, 30 ticks or more. You know, that is one gorgeous win there. And see how we're up above the whole time? All these wins, boom, 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 boom. Beautiful. A couple of losses there. Well, see, if you were using a bigger stop, this would have only been one loss. If you were using a small stop, this would have been two smaller losses. And so now we're over to the 6th, July 6th. The histogram's above the line. We get a signal. Boom. Nice winner. All these signals are just avoided and ignored. A thing of beauty. Okay. Histogram's above the line. We get the signal. Boom. All right. So I can keep going back as far as you guys want. Losing trade here. But why don't I share with you guys what the dot is. So win, win, win. One loss here if you're using a bigger stop. Two losses there if you're using, actually, no, there would only be one loss because the second trade did not qualify. If you see here, it dropped below the line. So there would have only been one entry there. Another nice win. Let me tell you what I'm working on here for the dot, okay? Now, for now, this would be a semi-automated signal, and what I mean by that is when the conditions were right, I would turn the robot on to execute the next signal. And this would have to be done on a separate chart. So if I were running this system in fully auto mode, that would be happening on one chart. And then if I wanted to trade this secondary signal, I would have the system set up on a second chart, but it not configured to trade these trades. You know, that would be happening on the other chart. And then on the second chart, I would be turn the robot on and off in semi-auto mode when I was trade ready. And basically what the second trade is every time the market, the histogram gets above the line and then dips back below the line, if I get a buy signal prior to falling below the green line, I want to take it. So you see the secondary level. So we have to get above the histogram level, but then I will still take a trade below as long as it stays above the green line. And I'll tell you what, initial results look really, really promising. As I mentioned, I only looked at this at about 10 days ago. But you can see this one just barely comes back above the green line. So let's just scroll back through and look at those dots real quick for fun. It still weeds out all this stuff, you know, because so we got below below the histogram. So now if I were trying to trade the secondary entry, I'd be ready. But then you can see the histogram drops below the green line. So now I would turn the system off. And these signals happen, the system would be off. Okay, so let's go. So here's one of the dots. So histogram's above, and it drops below the cyan line, but maintains above the green line. We get a buy signal. So that one would be a buy. Quite honestly, it's only a shorter sample space because I have not tested this over the 6-month period like I have the primary system, but the accuracy of these trades is astounding over this last month. Really, 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 really nice. Let's see where along. Let's see. Okay. On this chart right here, I don't think so. So we went above right here. We came below before, once these signals started to fire, we were back below. Okay, cool. So I'm right. So definitely anybody out there, if you think I missed one, call it out because I tried to identify them all. Okay. But again, the dot is not something the computer is generating. I manually put the dots. This has not been coded or anything like that. So here we just barely get below the cyan line, so we're good to go. It pulls back. It just barely stays above the green line, so that's a nice trade. So let me define multi-time frame, Fernando, the way I mean it, okay? I suspect the way you took it is not the same as the way I meant it, most likely. Basically, multi-time frame means that we're combining, we're going to have a portfolio that has a longer term system like the first one I showed, a medium term system, like these bars are about 20 or so, not exactly 20, but the first bars were 75 ticks in size. These are around 20. The next chart we'll look at, they're about 6. So, it just 3 different time levels of different versions of the market. So that's the multi-time frame. And they're not being combined together in the same chart or anything like that. It's a portfolio that brings together systems that trade at different levels, long, medium, and short. And in doing so, you're able to really minimize edge erosion. You're able to capture so much more than active short-term day traders capture all on, on their own. So hopefully that makes sense. We're scrolling back looking for more of those dots. Here's a couple. So we're below the cyan line. We pull back, just barely stay below the green line. Nice little trade. And then again here. Oh, only the first one too. Did I say that? Only the first signal. So like for there to be a signal, the histogram has to get below the cyan line and then come back above it, but stay below the green, and then there's a signal. To be another trade, it has to get below the cyan line again. So that's why this is not a trade, even though that would have been really nice. But that's why that's not marked, because we did not get back below the cyan line again. Okay. Let's see. But can created signals on higher or shorter time frames that market plus can execute? Yes. So Pablo answered there, but absolutely. Absolutely, Jonathan. All right, let's move on. We're at an hour so far, and I want to show you the short-term, an example of a short-term system. Pretty cool though, right? I'll have to be honest. I love this system. I'm super proud of it and really, really love it. So remember how I said there were no trades? There was only like one trade Wednesday, no trade Thursday. Well, the secondary entry did have a couple good ones. Okay, right there and right there. So that's kind of nice. If I bring that secondary entry online, even on the days that were not as optimal, they carved out some nice trades. Okay. All right. Last but not least, this is the indicator of the month. This is the indicator of the month for July, okay? So those of you that are indicator of the month club owners, we did a training on this yesterday, and I'll be sending out that video for those of you that didn't see it or get to see it this afternoon, shortly after we're done with this session. So this is a system that I created and have used for over 15 years. Just recently automated it for the first time with Pablo's help, and now have shared it with the indicator of the month club. But this is a system I've been using for over 15 years. And it is not, remember, we're in a short-term day trading environment. It is not a system I would want to auto trade, or excuse me, fully auto trade. I use it in semi-auto mode, and I trade it in a very specific manner. And in doing so, it gives me a very solid edge. If you just turned it on with full automation, some days you probably do very well, and other days you would not. But what I do is I trade it in semi-auto mode, and how I do that is I trade it with support and resistance. So what I'm going to highlight for you guys now is trading it in conjunction with two moving averages. The black line is a 50 EMA, and the goldish line, orange line, is a 21 EMA. So I will also, when I create support and resistance zones using my own methodology, if those are on the chart and a signal occurs in one of those zones, I'll execute those too. But those are not on the chart. So right now we're just going to look at examples of when the price action is engaging the moving averages. So these signals are, these are fully automated signals, and here's exactly how I trade this. Okay, price action's up here. As price action comes down and touches the 21 moving average, the gold line, I turn the system on and wait to see if I actually get a signal. And as long as price stays around the 21 and the 50, if I get a signal, I want to take it, and I do, and it's a nice little winner. I'm only interested in long trades when the gold line is above the black line. I'm only interested in sell trades when the gold line is below the black line. So I would not be interested in this trade because the gold line is above the black line. Where price action's up here, as it comes back and gets in here, I'd turn the system on and I'd wait to see if we got a trade. So we didn't get a trade on the first pivot, came back down again, and we did get a signal generated by our new indicator. And by the way, this signal is completely described in every detail to indicator of the month club owners. It's a system that looks at a 3-bar pattern and identifies certain characteristics. But see how few there are? It's pretty neat. So obviously there's some level of sophistication to what it's looking for. There'd be a whole lot more signals. No trade here because the line is above. You can see the gold line is below the 50 still. So I would turn the system on to be a seller as it got to right here, and then I'd leave it on until the gold line crossed the black, and it never did cross the black, and we got a signal, so I would let it execute it. Nice win. Okay, so all this price action, no signals, no signals, no signals. Oh, but I would turn the system on as it got back here. The system would be on here, here, and then as it pulls away, I'd turn it back off. And then as it gets back down in here, I'd turn the system on. No, you know, and then I turned it off, and then I turned it back on. So just because there were no trades doesn't mean I'm not, if I'm actively semi-auto trading this, you know, I would be engaging the chart in that way. There were just no trades. Okay, that this is again the gold. No trades here. Gold line's on the wrong side. of the black. The first one of these two is definitely a win. The second one is pretty close. I would take this trade personally. We have not fully crossed, and we got some downside divergence on these two pivots, so that'd definitely be one where I would leave the system on to execute the trade. So you can see, it takes 5 to 10 trades a day, depending on how active things are, which is, a nice little number. So the gold just got below the black here, so no trade there. We turn the system on here. This would be a nice win. That's a nice winning signal, but not one I would execute based on the rules we're talking about. And first trade here is a win. I personally would probably not have traded this because it's so tight, choppy, and ugly. But if you were just black boxing those rules, that one would have been a loss. And these are pretty close. The gold line's just trying to get back below. So if you took that one, it would be a win. If you didn't, it wouldn't. This was below. It didn't quite get above. So probably both of those trades should be avoided. If you took one, you'd take both. It'd be kind of a net wash, if you will. I'll leave that one uncircled. And this is a loser. Fits the criteria. As we're coming down, I'd turn it on. And no win there. All right, so there you have it. I'm gonna stop circling things. I'm just gonna slowly scroll through the data so you can see, that this didn't just work well on one day. For example, we wouldn't take, these are great trades, but we wouldn't execute. Well, we wouldn't execute those trades unless, and very possibly, there was a support zone down here. But based on the criteria we've been talking about today, we probably wouldn't have executed those. Loser there. So I'm just going to talk about what they are and not circle them just so we can go quicker. Winner there. All this price action that, for the last 4 minutes or so is all inside the same no trade here, and that's a loser. And, would you be up? That's like 3 a.m., so you probably wouldn't be up. So I personally try to stay away from these trades. You could take this one, but I would have been trade ready in here. But then the price action pulled away from the yellow line quite a bit. I tend to try to keep things as black and white as I can so that when I'm trading a system like this and maybe I'm managing some other stuff also, I don't have to think a lot. I just can know right away by looking at it whether it's a trade or not. So since that one's not engaging the yellow line, even though it's a nice win, that would not be a trade. This would be a nice trade. Same thing here. It's not engaging the yellow line, so no trade there. No shorts because we're on the wrong side of the black line. No trade here because we're not engaging the yellow line. No trade. That's a gorgeous trade. Maybe there would be a resistance area there so we could take that trade, but not based on the rules that we're using. Beautiful trade here for a nice win. Oh, look at that. So the first one is beautiful too, but this one I would not engage, but this one is absolutely perfect. Beautiful trade. All right, guys. So there you have it. 3 systems, 1 long-term, netted about 7,000 points in the YM over the last 6.5 months, and then a medium-term system that we show you that's kicking butt. So these were all YMs examples. I actually have this shorter-term example in the EMD also. So you definitely want to have, now we're looking at the EMD market, mid-cap market. You definitely, want to have other not just one type of market in your portfolio. So here's a quick look at another market with our short-term system. So feel free to start throwing any questions you have. We're doing pretty good, only at 1 hour and 15 minutes. So that's pretty cool. And I will get this recording out to you guys and to everybody that registered. And definitely don't be shy. Let me know if you, actually, let me go ahead and bring the PowerPoint back up for the contact information. If you have any questions, you can email me at andy@theindicatorstore.com. If you have any questions at all about the new service, definitely send me an email. That'll be coming online in a week to 2 weeks. And then if you have any, would like questions and or would like the link to take advantage of the special offer today at a 35% discount, definitely let me know. And there's the contact screen. Yes, Ryan. So a comment was made that it looks like you and Pablo prefer non-time-based charts. And that's kind of true, I think. You know, we do use a lot of range, a lot of Unirenko, and that kind of stuff. The thing that is not ideal about time-based charts is their ununiformness. So when the market is moving and things are going well, time-based charts are great. When you get slow periods, your chart gets all distorted and weird, and that's, you know, a pretty big negative that we're able to kind of, you know, really mitigate with some of these other chart types. However, when you do look at something like volume analysis, time-based charts are pretty important. I am a volume analysis, I guess I won't say expert, but I have a lot of knowledge and aptitude in volume analysis, and that's much more effectively utilized on minute time frames. Thank you. I appreciate that feedback. Any other questions or comments, guys? It's great to have you with us today, Jonathan. Thanks for being for participating so much. That's awesome. All right, everybody. Great to see you all today. Thanks for coming out on a Saturday. Take very good care and shoot me an email. I'd love to answer any questions that you have. Take good care. That's a wrap.